Alright, welcome back everyone. So, this weekend I went out. I had to go to a few places, do some errands. Went out to the store. The parking lots were packed. Everyone was shopping. Uh, Looked like life went back to normal all of a sudden. As soon as the weather warmed up, it's looking great. Although, I would say at least half the people are wearing masks. So I think this will be sort of a thing where you wear masks. And I ordered some N95 gator necks, and I'm gonna sew it to this one. I'm wearing it right now. As you can see, if I'm gonna go out in public with masks, I'm definitely gonna look cool or scare people. All right, so let's get into what's going on. First of all, for all the new people in the private group, when you sign up, you go to my website, right? You will receive a download instantly, and then also there will be a link emailed to you. The next day, because I have to process everything, you will receive an email. By the way, never mind this 40% discount. I mean, technically it is because originally it was $500, and then I've been just discounting, mainly because I just want to buy more mining shares myself, and I guess it's a little pricey. I mean, that's what everyone else prices their products at that are similar to my services, but I'm gonna undercut everyone because I'm so small. I can't compete on a larger scale because I don't have like an ad budget and whatnot, marketing wise, besides these videos. So it's 220, but you will also receive a 20% discount on that. You click on it, you add it to your cart. I've already done that. And then you click apply discount code. But you have to use the link below this video in the description section to be able to click on this apply discount code, and then it'll take the price down to 175. Sale ends tonight. And then you'll receive the email for the private group invite with instructions, intro video. You have to watch that so you're on the same page as everyone else, and you can find more downloads in the files folder and whatnot. Alright, I just had to clear that up. Alright, so for the private group, I watched this video. It was good. It was a Real Vision video, and this guy explained it very, very well. He's been pretty much saying what I have been saying, but for some reason, everyone is having a hard time understanding and processing how this works. When it comes to inflation, deflation, and the dollar. There's multiple things going on here. Alright, guys. I'm just going to read this real quick. Here's what I've been trying to explain, and this is why we will have much more QE this year and many years going forward. Remember, short term, like a few years, we will see stagflation in the US, but not hyperinflation. Alright, so what I'm trying to say here is on everyday items, prices are going to go up, alright? Especially since we can't get cheap Chinese goods. Cheap Chinese goods being imported into the US and Europe and the Western world has been hiding inflation for many, many years now, okay? Because the cheap substitutes hide the inflation because they're cheap goods. The quality's not there, but you're still getting the goods, Do you understand? Now that the supply chain and this move away from China is going to happen, um, your goods are going to come from more domestic markets, but the quality will be better, but the prices will be much higher as well. Like I went out to the store and I bought some drills. I bought a chainsaw, like DeWalt quality, but I also was looking at some Chinese goods because they're so much cheaper, and I know that they're not going to be around. I don't know when, but eventually they're going to get bought up, and then you're not going to get your hands on them. So if you're looking for something that, let's say, opportunity cost, right? You don't want to spend $500 on a chainsaw, which is quality that'll last you a life. You're okay with spending $100 on a chainsaw right now because you'd rather take the 400 and, let's say, buy mining stocks with it. Okay, that's what I did. So I bought the cheap Chinese chainsaw because I just need a chainsaw right now to chop some wood. Um, but I will buy the quality one later on. I just think that spending $300 or 500 on a chainsaw right now, opportunity cost wise, is not smart, because $400, let's say, in a junior mining cap stock, right, could yield you much more in the coming years. All right, so that's another trick to life. Literally everything in life I look at as an opportunity cost. Do I really need it now? Where can I put that capital? I'd rather put the capital to work than to keep buying things that I don't really need, or it's really not that of a necessity, right? All right. So let's get back to this. Let me read it again. Here's what I've been trying to explain, blah, blah, blah. QE this year and many years going forward. Remember, short term, like a few years, we will see stagflation in the US, but not hyperinflation. Emerging markets will see inflation and dollar demand rises. But one day, I can't read my. One day they may all default unless the Fed prints even more, so emerging markets can afford to keep paying the interest on the debt. So what I'm trying to say here is that demand for dollars, it's enormous globally because everyone's debt is denominated in dollars, and there really isn't yet a alternative to the dollar. Okay. So what I've been saying is the Peter Schiff argument is everyone's going to default, and then eventually they're not going to want the dollars, and then the floor drops below the dollar, right? And that will happen eventually. But Brent Johnson, right, the milkshake theory, is saying that they're not going to default. They're going to keep demanding the dollars because defaulting is, I mean, they're going to go out of business basically. I think both is happening, right? Right now we're seeing the milkshake theory thing happening, right? So that's why the DXY keeps going higher and higher. Here's the DXY. It's at 100 because the demand for dollars is enormous. And I expect that will continue for a bit longer. But the Fed in the U.S. does not want the dollar to become extremely, extremely valuable versus the rest of the world's fiat currencies, because then the trade deficit keeps exploding and we can't export anything. And then later on, we can't even go back to a dollar peg to gold, because that will be the end game. They will have to do that to stop the dollar from completely just becoming toilet paper, right? Or less. So it's a balancing act on the tightrope. So I think we're gonna see. Okay, so many things. All the inflation in the past 10 years since 2008 has gone into what? Cars, universities, homes, commercial real estate, um, business. A lot of corporations, publicly traded, stock market, all in bubble territory. Well, the bubbles are gonna pop, and all of that fiat's gonna come out of them, if not disappear. A lot of it's just going to go poof and vanish. That's when defaults happen. That's when currency and debt just gets just disappears, and that's deflationary. And that's what what's his name? I forgot now. It doesn't matter. Um, but that's deflationary, right? That's Great Depression deflationary. Inflationary is going to happen because when these bubbles pop, the money's going to rush out of them. And where are they going to go? They're going to go back onto the streets. And things are going to get, the money velocity will pick up. Especially since the Fed has no choice but to keep printing. So the balancing act is that the Fed keeps yields on the 10-year capped by printing money and keeping the dollar below the 100, let's say, or 110 DXY, because the huge global demand for dollars keeps growing. So the way that they balance it out is they just keep printing. And then because they keep printing, the dollar loses value, but at the same time the demand is there, so it doesn't, so there's still more demand causing the value of it to go up. But what's going to happen is right now in the next few years is they're going to just keep doing QE. And by doing that, the central bank, the Fed, has become the central bank of the world, and then dollars will flow so other countries, emerging markets, emerging economies can continue to pay that revolving door of debt and credit that they've taken on, which props up the dollar. But at the same time, the dollar won't explode in value because, like the milkshake theory predicts, because the Fed will just keep printing. And it's a balancing act. And you're going to see them. They're going to do less repos for a few months. And then again, they'll pick up and then do less and pick up. And it's just going to be a nonstop thing. All right? For years, probably. Or I don't know how long, but I'm assuming at least for a few more years, something like that. Now, eventually, this can't go on forever. And this is why Peter Schiff will be right in the end. It's because the deficits, they will keep growing exponentially, hockey stick, as all this keeps happening. We're talking about states, federal, credit card loans, home mortgage, everything. The debt is just going to keep piling on and piling on. And there's just a point where the debt itself is so immense and great that, for one, no one gets good credit ratings all across the board for private and for everyone, even countries and treasuries and bonds and everything, corporations. The credit can't stay high. So once your credit ratings drop for everyone, you can't continue to take on more debt. And then you can't even pay off the debt you've accrued over the past decade or a few decades. And that's when the end game happens. And when that happens, what will happen is the 10-year yield will spike. And the yields on treasuries will spike. And that's when the party comes to an end. And the Fed won't be able to stop it. Even if they're printing to keep the yields down, they're not going to be able to stop it. The bond vigilantes will come out. And then, even if they're printing trillions to stop it, people are just going to start seeing inflation go. It'll be noticeable. By the way, when I went to the store this weekend, prices haven't dropped. Well, not at the home improvement store. I mean, people, if anything, people have been doing home improvement for weeks now. Um, but eventually, I mean, you're gonna see $15 hamburgers, all right? And when the psychology of the masses, the sheep, the normies, Joe six pack, when Joe's six pack of beer costs $20, the confidence in the entire system goes away, and it can happen quickly. And that's when inflation explodes because people realize, well, I need to spend my money because next month it might be worth even less. And it's the entire thing is a confidence game. That's all it is. And people keep trying to figure out what they're doing, this and that. Guys, it's not that complicated. It's just a confidence game. And it's not just domestically a confidence game, it's globally a confidence game. Globally, everyone's been buying up metals and asking for their metals back from the vaults in New York. Okay? The confidence, let's say, at a higher level, which is global governments and banks, they already know. They know what I know. They're not that stupid. The confidence has been gone for many years. They've just been slowly pulling out of the system, getting their metals. And I need to bring up some research and take a look at the balance sheets of central banks all across the world. It's been rising in physical holdings of metals. That's why I'm pretty much this is the easiest trade in the world. Easiest investment strategy in the world. Just buy physical metals and take some extra cash you have and go gamble with it in mining stocks. It's a no-brainer. Absolute no-brainer. Matter of fact, they've been manipulating it down with silver. The amount of shorts that are on silver right now is larger than the above ground supply. So there's more people shorting silver than there is silver. Do you understand? By multiples, by like 10x or something. Which is obviously manipulation. So, and there's other nefarious reasons why they do that. They keep silver down. It's because silver is used in everything. So it's a way to subsidize companies like Apple, your smartphones and all this and that, your TVs, computers, everything. Everything has silver in it. All right, guys? Your Bitcoin miners, okay? It all has silver, and guess what? It's being depleted, literally, because they've been artificially keeping the prices low for like a very long time now. Many years, if not decades. So, because of that, when silver breaks loose and the manipulation ends, and there's a giant short squeeze and gold and silver go limit up, and they will. It's not if, but when. The game's up. And that'll also signal to the markets that the dollar is losing its value, because at the end of the day, the ultimate world currency is gold, and then silver as well, probably, because it's been depleted. There's actually more gold above ground in bullion form than silver. Now, for industrial purposes, yeah, there's more, and then in electronics and everything. But, it's being used, right? All right, so where was I? We'll talk about the news at the end. I'll brush through a bunch of stuff. What's going on with the markets? Again, let me cover this real quick. Just a recap. Here's oil, and I showed you guys the correlation between oil and gold. They're highly correlated. I don't think the price of the crude oil is going to stay this low for much longer. It's going to go back up. Now, I wouldn't invest in oil companies. I mean, they're just destroyed. Who knows? I mean, a lot of them are going to go bankrupt. So is shale, especially. And that was all subsidized in the past 10 years. And I know they're getting bailouts, but they're just going to suffer forever, in my opinion. Because demand's not going to fully come back because we're about to go through the greatest depression humanity has ever seen. All right. But that doesn't mean that the price of oil isn't going to go up. I'm talking about the commodity itself. Now, yeah, you could trade ETFs that follow the commodity itself, and I do, and I post that for the private members. But listen, when oil rebounds, and it will, and I'm not saying it's going to make new all-time highs anytime soon or anything like that. I'm just saying it's going to bounce back. At least around, it's right now it's down around, it's on the left side, by the way. The price on the right side's for gold. That's the candlesticks. The left side's for oil. WTI is at like 14.55 right now a barrel. I think by this year's end we'll get back up to at least 30, maybe higher, but at least 30. All right. So when that happens, and it will happen soon, as the lockdowns come off, it's going to help. That alone is also going to help metals go even higher. That's why Bank of America, BOFA, is predicting 3,000 gold this year. All right. And I predicted that last year. So, and like I said, once it gets above 1,800, there's no resistance for gold anymore. And we're going to new all-time highs. And again, one of the guys in the private group did some math. Most people are better at math than me. But anyways, the mining companies in the ETFs are priced at about 1,250 gold right now. Although gold's at 1735 right now. Actually, the futures, it's like 1745. So once it gets starts making new all-time highs, Wall Street can't ignore that. I mean, how could they ignore the massive gains that are about to come? The moves in mining shares are going to happen quickly. Like, very quick. You could miss out. In like 3 days, you might see 25, 50, 100% moves, like out of nowhere. So that's why it really pays to be patient and just to hold. Gold silver ratio, that's like at 140 historically. All-time highs for currencies globally. Now again, the deflation inflation, and I want to go a little more into detail about this. The dollar's still king. It's not king against metals, but it's still king against emerging market currencies because they can't print and bail themselves out. And everyone is still flocking to US equity markets and the dollar. So as our world goes into this greatest depression ever, at the end of the day, people would still rather risk holding dollars and buying US companies than holding their emerging companies. Now, in the near future, maybe 3-5 years from now, that's going to change and emerging markets are going to do better. But for now, during this risk-off or risky environment, the US still looks better because it's, again, the cleanest shirt in the dirty hamper, right? So short term, which could be, and I don't know, right? But it could be short term, could be next 3 months, 6 months, 2 years, 3 years, I don't know. That's why we watch this and we change our minds as things develop, right? Capital flight's still going to flow into US equity markets and the dollar. That's why the Fed can print another 10, 20 trillion. That's why. Because the world allows it. Does that make sense now? And the world allows it because the world is sort of stuck on this dollar reserve system and credit dollar debt system. So that's what's happened here. Okay. Now you do see the IMF and the World Banks and this and that talking about baskets of currencies, the SDR, maybe backed with a portion of it, a percentage of it with gold, this and that. That's what they want to do. I don't think that's going to work out because uh, countries are really out for themselves. They don't trust them. They shouldn't. And nationalism pretty much is on the rise. So everyone's pretty much looking out for themselves. Again, like I said, Europe is on the brink. I think Europe's the next big domino to fall. China just pretty much fell. And everyone's going against China as well right now because of how this all played out. And everyone's getting faulty test units, contaminate. It's bad. Um, anyways, I I could be wrong, right? I could be wrong about everything and all this. Consult your licensed financial advisor. I'm not a licensed financial advisor. Uh, but I do think Europe's in big trouble. Their banking system is just zombies. They're just nationalized pretty much. And I think every country's gonna, because they have to print, they're going to break away. All right. So let's talk about the Dow. I think here there's a couple things going on right now, right? We're about to have earnings, and they're just going to be horrendous. I mean, we have 127 earnings coming out, reports coming out tomorrow. Tuesday 177, 233 Wednesday. Wednesday is also the next FOMC. Powell, I think, is going to talk. I really hope he does. We haven't heard him talk in a while, right? He's been hiding because he's been busy, at the Burr machine. Burr. um, and then Thursday there's 310. This week's going to be huge. I think earnings are just going to be terrible. And the next ones for the next quarter are going to be even worse, probably. So, is the market going to ignore that these companies' earnings have been annihilated? They might because everyone's expecting it. I mean, we've been locked down, right? And this is kind of perfectly timed with the FOMC, although this was the schedule was predetermined. Um, Powell's probably going to be. I mean, he's gonna do a Mario Draghi. He's gonna say he'll do whatever it takes. He's gonna do that this week, which will prop up the markets while these earnings come out. And I bet Wall Street's gonna just decouple from any signs of reality, uh, because these earnings will pretty much say that a lot of these companies are going to go under. But everyone's going to ignore that because the Fed and the bailouts. And there's going to be more bailouts. The Congress, they're going to approve more and more. There's a reason why the Treasury Department sort of merged with the Fed, which is completely, unconstitutional. It's illegal, whatever. But I mean, that's real banana republic stuff. Um, but the market knows that, and the market has been conditioned for the over the past 10 years to not fight the Fed, just keep going along with the Fed, and the result of that is the hell with fundamentals. It's buy stocks, buy the dip. Now everyone's expecting the market to sell off. A lot of people are saying buy the rumor, sell the fact. So buy the rumor was this rebound here. Let me take it on the weekly. This is a monthly chart of the Dow. So here's a weekly chart of the Dow. Everyone's thinking this is a dead cat bounce. Buy the rumor, sell the fact, right? So this is the market forward looking. Buy the rumor. Now the lockdowns are coming off. Earnings are coming out. Sell the fact. And that may very well be the situation that we're about to experience. I don't know yet. But I kind of think it's a 50-50 coin flip. That we either get this, and then we get a correction, and then they'll probably push it higher, or maybe some sideways trading for the next few weeks and months, the rest of this year. Or, I mean, Trump's going to come out, Mnuchin and Powell, and they're going to promise another, who knows, just trillions. And more bailouts. And everyone's going to ignore earnings. And they're going to reinflate this bubble, guys. And they can. Why? Because the world needs dollars, so the demand's there, and they could just keep printing and printing because of the global credit debt demand for dollars from emerging markets and the rest of the world. And Europe, if Europe's in big trouble, there's capital flights still coming out of Europe. And if the euro itself, the currency falls, that pretty much enables the Fed to print, like, who knows, another 20 trillion or something, and they will reinflate this bubble. And then we might actually, who knows, we'll either get close to testing all-time highs. So it'll be either a giant bull trap, right? All right, this is hard to see now. Let's so follow me here. Watch. So this is a weekly chart of the Dow. So watch my screen. So this is either a dead cat bounce. Earnings are really, really bad. Sentiment changes. Correction. I think this is least likely. Actually, least likely is probably this. Because they can't let that happen. Because if the Dow and the equities fall any lower, the baby boomers are going to panic and pensions are going to just blow. Everything blows up. All right. So they're not going to allow that. And like I just said, the world is allowing us to keep printing. So it's either dead cat bounce, correction, maybe sideways action, or higher. Now I'm giving a lot of scenarios here. Or, believe it or not, we just go higher. And we test or we get really close to previous highs. But by this time it's end of the year, right? And economic data earnings are really, really bad. And that was the giant bull trap, the Wall Street cheat sheet, and then we go down. Or the milkshake theory is still playing out, but the dollar isn't. It doesn't mean that. I don't think the dollar is going to go much higher than the 100 handle. It might get to 110 or whatever. But that's only because Europe is in deep trouble and the emerging markets are in deep trouble as well, and the demand is still there, right? But if it is, that means that that allows the Fed to print like another, who knows, 10 trillion or whatever. And then maybe they will take us to new all-time highs. Despite small businesses going under and the real economy, Main Street, is in a depression. I know it sounds insane, but if you haven't noticed, we live in an insane world, okay? So that is also very possible. I don't know. We're going to find out. Personally, I don't care, because this entire time, whatever happens, metals are going higher. There will be corrections later on. I just think there will be, like, again, watch my last video. I talked about metals. I don't really want to talk about metals again because I pretty much covered in my last video. Um, let's take a look at the news real quick. Oh, nice. I'm under 40 minutes. A lot of Americans are going on unemployment, and a lot, I mean, this is probably going to be over 30, 40 million, who knows. And they're actually making more money doing that, which is just disgusting. I mean, there's no resemblance of free market, guys. This literally incentivizes people not to go to work. If that isn't inflationary, I don't know what is. And that just destroys the economy even more. See, US banks are pulling back from lending to Europe. That could be strategic as well, believe me. So what else is going on? Food shortages. I mean, there are stories of farmers having to slay their livestock. Let's continue here. A lot of states in the U.S. are coming off a lockdown. Will there be a second wave? Maybe, or maybe by then people will just come to the realization this was just a flu, brah. Anyways, look towards other countries like Hong Kong, Japan, Sweden. I don't know what's going on with this. Rumors, I don't know. I really don't care yet right now. What else is going on? Most Americans will be scared to return to malls when stores finally. Listen, I was getting new tires put on. This lady comes in and she's asking the auto mechanic, right? So do you guys use gloves and masks and this and that? And she sounded super concerned, even though she was wearing like it looked like looked like underwear on her face, which does absolutely nothing, right? And it was funny because I told her, I'm like, it goes through you could get it through your eyes, and she's like, oh my god, really? Like, so I was super concerned. I was like freaking her out on purpose. It was funny. It's fun. But yeah, I mean, people aren't gonna go back to they're not gonna go to concerts. They're not gonna go to malls or movie theaters probably for a while. Like, even if you see a 50% drop in people going out, I mean, that's enough for, to really impact the economy really, really badly. I mean, malls were barely afloat prior to this. Commercial real estate's going to get hit so hard, guys. It's going to be amazing. I mean, it already is getting hit hard. So, I mean, that's common sense. You guys are smart enough. You guys know that. Like I said, guys, the good thing out of all of this is people are seeing how draconian things could get, right? This is a good article. I posted it in the newsroom. It's free. Links below this video. Guys, there's like 8 chat groups, if you didn't know. So the corporate debt, all these companies that I was complaining about for the past few years that they've been doing corporate stock buybacks. Yeah, they're and I told you guys when there's a bear market, they're gonna get hit the hardest, and they are, and they're also getting bailouts, right? Now the Fed has to, you know, eh, privatize gains but socialize losses. And who pays to bail out these reckless companies and CEOs who got golden parachutes and they also bought back their stock shares because they get bigger bonuses, right? Who bails them all out? These fat cats. We do. We don't directly. They don't pull it out of your paycheck, but like I said, your burger is gonna cost more. Your food's gonna cost more. But you know, an average normie, Joe Sixpack, can't put two to two together because they go to public schooling. Um, Again, conflicts are going to spur up globally with the energy crisis, and historically, just look at the past wars. It was always right after uh, great depressions and whatnot. I don't want to get into that in this video because I want to keep it under a certain amount. Warren Buffett was hit hard. Good. I'm just going to pretty much end it there, guys. Oh, here's another good thing. So, people who pay rent, they're pretty much going on strike. For one, because the state told them you don't have to pay this month or next month. And once you give people that, it's really, really hard to take it away. And, you know, it's election year, and a lot of them probably don't have the money. Or they are on unemployment and they can pay it. I don't know, guys. We're going to see how this is going to play out, but are they going to bail out all of the rentees? You know, people who own apartments and homes that they rent out. I don't know how this is going to work, but all of it is socialism. That's all it is. Again, nobody should get bailed out. Not even us. What it does is when everyone gets a bailout, it just causes people to not take self-responsibility, and promotes irresponsibility, basically. I mean, you're not a child. Everyone should save money and plan for rainy days. That's common sense, right? But of course, you know, we don't live in that world anymore. We're towards the tail end of an empire, right? And the good times for globally. It's not just the U.S. It's globally. We've had the good times for about 100 years now. So we're probably going to head towards some sort of darker ages. Anyways, Carl Icahn, great guy. You know what Carl Icahn's known for? He finds badly and poor managed companies in distress. He goes in there, does a hostile takeover, and then fixes the company, makes it profitable again. He's a real capitalist. We need more people like him. So, that's pretty much it, guys. Go to my website, sale ends today, and yeah, smash some likes, leave anything in the comment section. I will get to all the comments. I haven't commented back on the previous videos because I've been really busy lately. So leave a comment, smash some likes, resubscribe. People have been getting unsubscribed, and now they're messing with the view counts on people's videos. Hopefully, though, alternatives will start gaining some traction. Hopefully, I don't know. I really don't. It sucks because I just don't have confidence in the masses. They're so I don't know. We'll see, guys. Hope for the best, plan for the worst. Who cares? We're gonna make it, right? Until next time.